Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, July 2nd, 2020. I am Frank Ochoa, aka PivotBoss. Before we get to the ES here, I do want to say thank you very much for attending my PivotBoss monthly market outlook that we held yesterday for the month of July. If you haven't watched it yet and want to watch the recording, you can go to pivotboss.ecofin.co and jump into the room here in the PivotBoss community room, which is a free room for everyone. There is a link right here where you can watch it. Additionally, you can go to PivotBoss TV and you can watch it here as well. That's where we have the PivotBoss monthly outlook. You'll also have the pre-market reports here as well. So all the pre-market videos, including this one, which will now be in this first position. The monthly outlook will then move to second and continue to move down the line. So again, you can come in here and take a look at the monthly market outlook. We went 90 minutes strong yesterday of a ton of charts and talking seasonality as well. A lot of great concepts and ideas there for the month ahead, so check it out. Additionally, right now you can see non-farm payrolls just came in better than expected, 4.8 million versus the 3 million estimate here. That's pretty big and is currently pushing the market higher. If we take a look at the ES in the daily time frame here, you'll notice the same. We've had a big push higher here so far, right after the report here, where price was huddling right around the 31.27s or so, and then exploded to the upside here, reaching a high of about 31.4575 so far. For the most part, this 31.50 is significant resistance. Look at that LV in there. Price was above here for 3 days, and the big flush came where it took out the lows here. We got the big reversal day here that brought us back to 31.50, but since that 31.50 there, we haven't been able to get through it. So right now we are coming into that zone. We are less than 10 handles away, less than 5 handles from the high of the day. Actually, the highs of the day is actually 45 evens, so 5 handles from the current high of the day. So 31.50 is going to be very important. Again, one thing we've been talking about here is how the uptrending channel is still kind of intact here, and the fact that we have been pushing up or bumping up against the lower boundary here suggested that we were about to see an upside push. And again, this push can take us to 3,400 over the course of the month. So again, we talked about that concept and the seasonality of July heading into August as well in the monthly outlook, so check it out there. All right, let's take a look here at the NQ. Now, with these rallying right now off the NFP number here, we got to also watch for signs of failure. After a big pop higher, do they start to see profit taking heading into an extended holiday weekend? This will be the last pre-market report until Monday in observance of the 4th of July holiday weekend here in the United States. So again, we could see a further push higher throughout the day, but does profit taking come in ahead of a long weekend? Again, if price can't hold above the 10,310s, 10,300 here today, that could be an early sign of a rejection ahead of a pullback, as we did last time here. Basically, a failure here, a little bit of a pullback, then we try it again. If we get a failure here, a little bit of a pullback, and then we try again heading into the rest of the July. We'll see how that plays out. Okay, let's take a look now at crude oil. You'll see here with crude, this one is very similar right now to the ES and the NQ in that it's holding up here near these highs. It's building some energy here, and again, it looks like we're about to see a release of that energy to the upside. One thing that we can do is quantify this recent range. Over the course of the last 10 or 15 bars here, we really have had a fairly narrow range. So let's look at this on a 10 bar range and quantify that. Not sure quite what that reading is going to give us, but it's very narrow indeed here over the last 10 bars. And you can see right here 73% of ADR, and that's because the average has been narrow for about a month. And you can see over here that we have come down in volatility tremendously up until coming to this point here. And the last time we were that compressed was right before volatility increased. So here we are back here and the increase occurred. When we got close to it here, increase of volatility, and now here we are very compressed, perhaps an increase of volatility is coming soon. So we've been compressed big time. We continue to see the 8-period average hold day over day. As I've mentioned that the last couple of days have been basically the low right at the 8-period. One thing we were looking for here in the trading room was any failed low. So if this thing were to push below these lows and reject, it could be a tremendous signal to push higher. But right now, everything still suggests more upside here until proven otherwise. But it's certainly having some trouble around 40. But it's building energy for the next major move, likely to the upside. And again, if we get a move, it could be about 7.5 points of movement once we get that breakout. So right now, that from current prices, that's forecasting somewhere in the 47s. All right, let's take a look here at gold futures. Now gold here has rejected the previous month's high and turned into a bearish outside day at one point yesterday, where it took out the high and at one point was below the low. We did close a little bit off those lows, but again, still below the midpoint here today. Still rejecting 1800 for the moment, and 1750 remains the big time level still. You see this right here. This is the Pima trigger zone here. Defended here, defended here. We could drop a little bit lower, again 1760 into the LVN, but we need to be able to pop back out of that zone. Failure to hold 1750 here could rotate this thing right back down towards 1700 and perhaps even as low as 1670. So right now, again, we talked about the explosive move to the upside here that has happened recently. It's trying to trigger a continuation. And again, I'll mention that this low right here, which is the midpoint, the bottom of the pivot range there, that is the key level there where it confirms a decline. We could drop as deep as this and still be a continuation higher down the road. But right now, 1750 to 1760 would be the early violation point. All right, that is it for now. This is the last pre-market video here until Monday, July 6th. That will be when we release the next pre-market video. But for now, you can watch the PivotBoss monthly market outlook. Again, go to pivotboss.ecofen.co. That is where you can jump into the PivotBoss community room and grab that link or watch those videos. If you don't have a registration, you can sign up for free, and if you want to jump into the premium trading room at some point, you have 50% off your first month. All right, that is it for now. Have a fantastic weekend ahead, and I will see you soon. Take care.